Coronavirus has given the Australian workforce its first real test in a mass work from home scenario. If you are an employee who's been working from home during this period of time, there are different ways to claim deductions that you may be eligible for based on your home office and setup whilst working from home during this period. Welcome back to my channel. My name is Reese. In today's video, we are talking about the 3 methods that you can use to claim deductions on your tax if you've been working from home during the COVID-19 crisis. This is going to be the first of a few videos that I'm going to be putting out over the course of July, which is tax time. If there are any videos in specific that you want me to make surrounding tax, please put a comment down below and I will be sure to make a video surrounding that to hopefully make the topic a little bit more clear for you. As a disclaimer, this video is specifically about individuals as an employee working from home, not a business owner working from home. So this is the 3 methods that you can use for your tax as an employee for a company. So briefly, to claim a deduction, there are 2 rules that you really need to follow in order to be eligible for a deduction. The first is that the expense must be directly related to earning your income, meaning it must contribute to your business in a way that allows you to complete your work at the detriment of being out of your own pocket. And the second rule is that you must keep a record of it. So you must have a receipt, a logbook, a diary, some form of way to prove that you made the purchase and that it came out of your bank account. So a receipt is generally the most common when you make a purchase for work that you plan on claiming a deduction on. So this means that you can't actually make a claim for anything that has been provided by your employer free of charge, where you've gained something but not actually paid for it. You can't make a deduction whatsoever for something like that. And you also can't claim a deduction either if you have been reimbursed for a purchase. So let's say you bought a brand new computer monitor and your work paid for it and gave you the money back through a bank transfer, you can no longer claim that. It's no longer tax deductible. So with the rules established and that cleared up, now let's talk about what you actually can claim. So there is a variety of information provided by the ATO and different channels, different news sites, of things that you can claim every year. Here's just a simple overview of that list. So if you're working from your own home where you pay your own bills, you can claim the electricity portion of heating and cooling, lighting, that aspect of the space that you're working in or have been working in over that period of time. Any cleaning costs, if you pay for a cleaner to come and clean the area that you work in. Phone and internet expenses, so if you can prove that you've been making calls through your phone logs to your company or to people within your company, and same with internet being connected to a VPN or connected to the internet working online is how everyone's working at the moment, you can claim portions of your internet and phone bill as well. Any stationary consumable, such as paper, ink, anything that's going to contribute to you doing your job, but is a stationary cost. And lastly, home office equipment. So things like your desks, your office chairs, your monitors, your keyboards, your mice. All of these things have limits as to how much you can actually claim for them, but they are things that can definitely be deducted in some factor or another come tax time. That limit is $300, so you can claim the full cost up to the limit of $300, or you can claim the decline in value for items over $300. And I'll explain a little bit more in a minute about that. In general, the things that you can't claim are things like tea and coffee expenses that a work office might have provided for you. You're not allowed to claim things like that. Other things are costs towards your children's education or putting children in childcare because you've had to work from home. You can't claim things like that at all. So they're out-of-pocket expenses that are on you, unfortunately. And you cannot claim the time that you haven't actually worked. So you have to be careful with this one here. So if you have spent time on a lunch break or time educating your children during the work period or work day, it's not time that you're allowed to claim either. This will generally match on your timesheet. So if you book 38 hours a week to your employer and you tried to claim 40 hours a week as a deduction, that would be a big no-no. And if you got audited, you would definitely get caught out. Wouldn't recommend doing it. Treat it as the hours that you book each week is the hours that you're able to claim as a tax deduction. And I'm going to dive into a little bit more about the hours thing and the fact that you're working hours every week. You should have records through your pay slips or your timesheets to be able to prove if you were to get audited by the tax office, which does happen. Be aware of it. It does happen. So now for the more important information. How do you calculate these expenses and turn that into a deduction? So depending on your circumstances, there are 3 methods that you can use to calculate deductions. Now, all of these methods are interchangeable, and I'm going to explain each one briefly I'm going to explain one of the methods much more in depth, and the other two are similar with minor differences. The three methods are the shortcut method, the fixed rate method, and the actual cost method. I'm going to use the shortcut method as the main explainer because I believe it's the most common that people will use come tax time. So as a disclaimer, the period of time that you can claim the shortcut method within on your tax return is from the 1st of March 2020 to the 30th of June 2020, which is the period of time where most people will have been working from home during the COVID-19 period of time. This type of deduction has been put in place by the ATO to make it very simple for you to make a claim for the hours that you've worked from home and the costs that you've incurred without having to go into the nitty-gritty calculations. The shortcut method covers all your expenses over that period of time though. So it includes things like your electricity bill, like I said earlier, your phone and internet, any of your stationery around the room that you've purchased, any of your office supplies that you've purchased. It is everything encapsulated into the 80 cents an hour. So if you're someone who has been working from home during this period of time, but not incurred massive expenses, such as myself, where I haven't really needed to buy office supplies, too much stationery, I definitely don't pay a cleaner to come clean the area around here. It's mainly my bills, my phone, internet, and just the hours that I'm working that I'm going to be claiming. So I can already tell that claiming 80 cents an hour is going to be the easiest way to do this process. To claim this deduction, you don't even need to have a dedicated workspace. You could be working anywhere in the house and it still be applicable for you. Just remember that time frame that I said earlier, the 1st of March all the way through to the 30th of June 2020 is the period that this 80 cents per hour worked only applies. This is the shortcut method in simple terms. And just to reiterate, the calculation is literally the hours worked multiplied by 0.8, which is how you get the number that you will be able to deduct from the time worked at home. The second method is the fixed rate method. Now this is very, very similar to the shortcut method, just with a few minor discrepancies. Now the fixed rate method is practically just the same as the shortcut method, but this is what was used prior to the COVID shortcut method being introduced. It allows you to claim a deduction of 52 cents per hour worked, but it has some differences to the shortcut method which could increase that amount claimed. However, to use this method, you do need a dedicated work area. You need an office space that you use regularly that is set up for you to work at home. There are 4 things that this method doesn't actually include, which is where it could be beneficial for you to actually use this method instead of the shortcut method. So the 4 things that aren't included are your phone and internet expenses, your office supplies, and your decline in value of purchases over $300. So if you had to basically buy everything for your office for the work from home period, this method may be really beneficial towards you because you can claim 52 cents for every hour you worked across the whole period of time, plus another whole chunk of money for all of your expenses. Just remember that any expenses you incur, you must keep a record, including your hours worked. You can use the representative 4-week period rule, which is if you have the same setup for 6 months, and you record everything for 4 weeks outside of purchases. So the hours you worked, for example, you can just show that 4-week period and say, this has been the same for the last 6 months. And I can back that up if you do require the information, but this is all I'm going to show you for this period of time just to prove that this is what I've been working. If you get audited and they say, we want the other 5 months worth of timesheets or pay slips, you're going to have to show them that information. But the representative 4-week period method is there because not everyone's going to get audited, and generally it's enough information to give them confidence that you are actually sticking to that routine whilst working from home. And finally, the actual cost method, which is where you calculate the actual cost of every purchase you've made, every hour you've worked, every percentage of energy, internet, and phone usage that you've used. This is that method. I don't recommend using this because generally, unless you've been working from home for an entire year, it's not going to be beneficial to do this because the costs between the shortcut method, the fixed rate method, and the actual cost method should all be relatively similar. And the shortcut method and the fixed rate method are much easier to use. Like I said earlier, these methods are interchangeable, meaning you can use the shortcut method for the COVID-19 period of the year and the fixed rate method for any days you worked from home prior to that. So you can do the calculations and submit them through your accountant or your own personal tax return, which I will be putting out a video which discusses the difference between using an accountant or submitting your tax return, so stay tuned. But in this instance, you can organize it in a way that works for you. Just be wary of that because it could be more beneficial to split them up in different time periods based on how much you've been working from home and if you were working from home before the COVID period. Hopefully this video has given you a better indicator of how to go about claiming your work from home tax deductions during the coronavirus period and prior to that, depending on your work situation. I've left some links in the description below which will provide you with more information on the very specific topics about claiming what you can claim, what you can't claim, but surrounding the 3 methods that I've explained in this video. So if you need more information, feel free to click on them and have a read through. It's not a lot of content, it's pretty easy to absorb, and it might clear it up a little bit more if I haven't done a great job of doing that for you. Overall, I hope you learned something new in today's video. I hope that it was insightful. If you did, please consider liking and subscribing, and I will see you in the next one.